Picture this, a handful of people sitting high above the world in glass towers, quietly typing on keyboards. With just a few keystrokes, trillions of dollars are created out of nothing. No printing presses, no gold, no limits, just numbers on a screen. This is quantitative easing, the modern magic trick that reshaped money itself. Marketed as a rescue plan, but in reality, it became the largest wealth transfer in human history, funneling money from the poor and middle class straight to the top 1%. Let's rewind to 2008. The global financial system was burning. Banks collapsed, stocks crashed, millions lost jobs and homes. Central banks, the Federal Reserve, the European Central Bank, the Bank of England, stepped in as firefighters. Their solution? Create money from thin air and flood the system with it. Quantitative easing, or QE, works like this. Central banks buy government bonds and other assets from private banks. In return, those banks receive freshly created digital money. The idea was simple: pump liquidity into the system, get banks lending again, spark growth. On paper, it was genius. In practice, it was something else entirely. Instead of flowing into the real economy, most of that new money stayed trapped in financial markets. Banks bought more stocks, more bonds, more real estate. Investors got richer. Stock prices soared. Housing costs exploded. Meanwhile, wages barely moved. Between 2008 and 2023, central banks created over $25 trillion through QE. Stock markets hit record highs. Housing prices doubled or tripled. Billionaires multiplied their fortunes. But ordinary people? First-time buyers were priced out. Renters paid more than ever. Savers earned almost nothing on their deposits. QE didn't just rescue the system, it reprogrammed capitalism. Markets stopped responding to real-world value and started dancing to central bank announcements. When the Fed prints, stocks rise. When it stops, markets crash. QE made borrowing cheap and saving pointless. It fueled record government debt, reckless corporate behavior, and moral hazard on a global scale. Corporations borrowed at near-zero rates, not to innovate, but to buy back their own shares. Between 2010 and 2020, U.S. companies spent over $6 trillion on stock buybacks, inflating share prices and executive bonuses, while worker wages stagnated. During the 2020 pandemic, the U.S. borrowed over $3 trillion at record low interest rates. Free money, right? Except it wasn't. Inflation became the invisible tax everyone paid. QE turned into a global addiction. Each new crisis required more printing, more stimulus, more intervention. Stop QE and the markets crash. Continue QE and currencies lose their value. Either way, the system becomes more fragile. QE didn't just change markets, it rewired society. It rewarded the asset owners and punished the workers. By 2021, the top 1% owned over 32% of U.S. wealth. The bottom 50%, just 2%. Inequality exploded. Young generations, millennials and Gen Z, now face home prices 8 to 10 times the median income. Retirees watched savings lose value. Small businesses were crushed by corporations swimming in cheap debt. And as QE spread worldwide, it distorted economies from Brazil to Japan. When the Fed printed dollars, global markets inflated. When it tightened, emerging markets collapsed. Central banks became the most powerful unelected institutions on Earth. A single announcement could create or erase trillions. QE blurred the line between monetary and political power. Free markets no longer functioned freely. They were managed by liquidity. Money was supposed to reflect value. But under QE, trillions were created without production. The link between work, value, and reward was broken. It taught societies that consequences could be delayed forever, that debt had no limit, that crashes could always be fixed by printing more. But history disagrees. Every empire that tried this, Rome, France, Germany, ended the same way. Devaluation, reset, collapse. QE is just the latest chapter in that story. The largest, most complex wealth transfer the world has ever seen, from the many who earn money to the few who create it. So the question isn't if this system breaks, it's when. When confidence fades, when money stops feeling real, when even central banks run out of tricks, what happens then? If you found this breakdown valuable, don't forget to like the video, subscribe, and turn on notifications for more deep dives into global finance, economics, and power. Share this with someone who needs to understand how money really works, because the next wealth transfer is already happening.